Hello, welcome to Express Notes, ACCA Paper P7 International, not the UK version, for the Advanced Audit and Assurance. The reason why it's called Advanced is there's probably a few more aspects beyond F8 that you will have to learn when doing this paper. Also, I guess the style of the questioning is different in that they're professional marks and there are longer questions with scenario-based information to which you apply your knowledge. What are we going to look at? Well, we're going to look at roughly 12 chapters. We're going to start with assurance and engagements and understand what they are, what's the difference between an audit and an assurance. Look at audit reports, audit risk, quality control, all the way through to group audits, which is definitely something different at P level compared to the F8 paper, forensic audit and prospective financial information and what that means. The recordings will be roughly 10 minutes long, going through the key parts of each chapter. I think it's important at this stage to explain that the Express Notes, what are they about? Well, they're just an abbreviation of the syllabus. They do not cover everything in the syllabus, but basically cover what we believe to be the essential points and are useful in the way of revision. The next thing to do therefore is to go to chapter 1. Chapter 1, assurance engagement. What is one? Well, what we do is we start each chapter with a big picture. F8 is called Audit and Assurance, Paper P7 is called Advanced Audit and Assurance. At both levels you're therefore required to have some knowledge of assurance engagements, which are something other than audit engagement. An audit engagement is an assurance engagement, but clearly there are other things which are non-audit, which are assurance engagements. You will quite often have to contrast an assurance engagement with a non-assurance engagement. At the fundamental levels, the vast majority of the questions are based on the audit of limited liability companies, and any examination of assurance engagements was like to be knowledge-based, so knowledge-based general principles. P levels, no. Knowledge is assumed. What you then have to try and do is get a practical answer to a practical question, and often relating to non-audit type engagements. That's the difference between F8 and P7. Key terminology. An assurance engagement. Well, what is one? It's an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended user that the responsibility party about the outcome of the evaluation or measurement of a subject matter against criteria. That could be an audit as we know it, statutory audit, but it could also be some other piece of work, like a review of a cash flow forecast, for example. That is another form of assurance. Assurance engagements are broken down into historical financial information, where you give a reasonable assurance as to whether it's true and fair, which is a statutory audit style, or a limited assurance, where you're not guaranteeing quite as much as you would with a reasonable assurance, and that will be a voluntary audit. Assurance engagements on other information can be things like value for money, KPIs, etc. Non-assurance engagements, however, are indicated as including agreed upon procedures. So you agree with your client what you're going to do. You do a review of an engagement, some work, and you compile your work. Reasonable assurance engagements on historic financial information would basically be a statutory audit, as you and I love and know, and you conduct your audit in accordance with international standards on auditing. Auditor will give an opinion designed to increase the level of confidence, which I'm sure you remember from your P1 papers is what that's about. Limited assurance engagements on historical financial information This is seen as a possible alternative to the statutory audit. An example would be proposals for the introduction of mini audits for companies falling below the audit exemption. No currently any statutory requirements, but however a significant increasing number of companies are requesting limited assurance engagements on an entirely voluntary basis because they perceive that by doing so suppliers, customers are more assured than otherwise would be the case. Now, in a statutory audit, an auditor gives a positive assurance that all is well. With a limited assurance, only negative assurance is provided. In other words, you haven't found anything negative about the engagement. A limited assurance engagement involves more limited procedures than are required for a full statutory audit. In effect, no opinion is offered on the information, though some assurance is provided as to its reasonableness. So typical wording will be as shown here. The work involved in such engagements on something that's other than an audit or review of historical information. Work is similar in many respects as an audit engagement, hence why auditors get asked to do it, but the context is different. ISA 3000, which you don't need to learn numbers or anything, provides guidance for such engagements, and the summary of the requirements are below. There are ethical requirements, quality control, engagement, how you take on the client, and planning and obtaining evidence, how you conduct your work, which actually in many ways is the same as a statutory audit, so will feel very similar. Finally, reporting, how you report, the style you report. Value for money reviews, well, what are these? They basically are looking at the economy, the efficiency, the effectiveness of the thing you are reviewing. Tends to be in public sector practice and other non-profit for organisations, where alternative measurements of performance are viewed. Now, the vast majority of the knowledge required for this type of engagement is regarded by the P7 examiner as assumed knowledge from your F8 studies. So F8 is quite useful to learn and think, how long ago was it that you studied that? Key knowledge for key performance indicators. KPIs, which most people do with appraisals at work, focus on the aspects of an organisation's performance that are most critical for its continued success. Many companies frequently engage in this and offer in their annual reports KPIs. These need to be reviewed by the auditor to establish whether they are reasonable. KPIs can be financial or non-financial. Assurance approach to KPIs will require careful consideration of the following. You need to consider the definition of the KPI, how it's calculated, the purpose of the KPI, and the nature of the evidence available and source of underlying data that you can use to test whether the KPI is correct, both correctly measured, calculated, and understood. Okay, that's the end of chapter 1 and recording number 1. I'll see you in the next recording.